Hey guys, morning. Level 2 here. Alright, we had a big punch in the market last night. Trade news, trade news, trade news. Trade deal might be in play. Here, go and look at what they're talking about there. Yeah, they're talking about may sign deal, may not sign deal, stuff there. So let's start with the review of yesterday. So we wanted to sell some 75, 76, got in 75, 76. Got out two contracts. Well, look here. What was that? That was the gap fill we were looking for. Yeah, to the tick fill. So if it was a ball at that point, all well and good. So I've gotten some points. Right, so more or less ICES on crude. Right, without seeing what we did live. We lent on 45s early in the morning, got blown out of that. And then lent on the 80. Tried to buy a little bit late. We had spread option on on the oil at the test of 80. We learned on that a lot. Went out and had lunch and never came back. We just let it run the close. So we had a profitable day yesterday, but every day is an next trading day. So our trade small, trade smart. So what we got last night, we had chickens having issues this morning. My mom taking care of them. She need to go to the airport this morning. Right. And so what we do have here is a big punch to the upside on the news itself. As markets, nearly all markets were closed at this time. So you would see this big strike up and it was looking really pretty. And where did it go? To the equal measure move we've been talking to for the longest while. I had a double sitting here. I got 6 points. Holding the secondary on this trade. Close at the market open, looking for the fade. Should have get 10 points off it. Drop my stop losses to 4 points. So I know I've guaranteed small amount of profit. Cover that trade. If you do see the retest now, we have this here with the retest, because this is a equal measure move we're looking at for the CPL liquidity, so we'll be monitoring the order book and heat map just to make sure that we have enough liquidity there. Now you're trading against all-time highs. You have to be careful what you're doing. Do not over leverage. If you're not in this trade already, do not over leverage your account thinking, because selling into all-time highs is a very difficult thing and a lower probability of success. But we have our trade set up right there for a long while. So make sure and trade what you see. Trade your plan. If your plan states that you could sell at 92, your stops required to be above 98 minimum. So our stops are actually at this 0 point. If you have to start in a trade, so how our trade is set up is like this. It is already active. It was sitting here for quite a couple days, so you will see the market locking up. Monitor that trade plan trade right there. You know where yesterday's deviation was at 92. So we know where there's today's deviation moved up, and we have a 1 sigma tiny right here at 98. So we may lean on that. So if you're trading, look to 1 star or 2 star this level. If you're trading a single contract on the open to avoid over leveraging too early, don't have any issues with that at all. So our trade position is, because we already take profit on plus 6 points on this one of the positions, and roll stops to 4 points with a single entry on the retest on the open with full risk, so we don't have too much risk on. looking for a Tesla the 80 as the exit. You can see where yesterday's POC is, where the value area is very locking up. You can see we have a band build here between 77 and 80, which is a possible buy band. On it, if you're looking at POC, we'll look at it in a little bit. So from the market open, so market open is what, 9:30. I think that should be equivalent to my chart. Right, at 9:30 we know we could have the trade activated there. I'm looking for sell. We already in one, we got out of one pretty early. Okay, this was looking at that sitting here. This is where GTC trades becomes important. So we have the points we gained from yesterday also, and profitability to lean on when we trade and that stuff. Use profits to make money. Don't have to lean on the market. Stocks are there. We have secondaries, which is we look at the sell 96 and 97, 96 and 98. We averaging it at 97 with a single entry. If we do see the test this morning. So as of now, we only have one position. One here, and one position that are working order for the retest. So this part of the trade more or less complete, and probable sell back. God. Let's see what oil did. Oil is back at our famous number again. Again. Yes, it's at 57.20 at the moment. Oh god, in some Tesla yesterday and got out a single again. So right now we have total of 5, 6 on new position. I think there's 5 remaining. It's really Tesla so fast. Got lucky, as you say. So you can see where yesterday we tried to identify and got to the tick entry on the CL on the retest right there, posted that up. We know where the breakout was, we know where we wanted to enter. You know, prior to the news we got flushed, retest, looking for the retest right there, retested for 26, which was the open. We tested the high and failed. Tried to buy this, got stopped out. I just got stopped out for a little bit less. Took a 20 point stop on it because we managed to trade pretty quickly and we had our trade running. So reasonably, the market be back sitting here again. So just be careful on what you're doing on oil, what you're doing on it. And talking about gap fills, that's what we call a gap fill. Oil boy had an amazing day yesterday. You can see where the gap fill is here. Like he really does read the market well these days. Had a couple of buys here sitting for us internally. Prior to the close, post close, we will what to do to just make sure and see if the market, how the market reacts. I had the setup based on structure right here, so you got to know exactly where the stops were. Which was flat 56, and he held on for a pretty nice run because he didn't want to be a bear, so he had one contract out at the secondary, and he had one secondary and tertiary right outside at the test of this low here. So he got more or less this run up here. We don't really have issues with getting the whole market once you get part of the market, and you can see this retest on the London just prior to London open here for the punch to the upside. We did not participate in that. So it's gonna be rangy again today, so oil I take a do. So now we see the gap. This provides what into here. And a lot of choices gonna be made if the bulls or the bears. If the bulls will come in the market, look for that test of the high. This range will become very important. So look for the test of the high here at 58.14 if they do get a big push to the upside. Yeah, shut up. It's a ping ping ping. Roku take a small hit already. So FT will be jumping on board just now, so I'll probably just watch it out, but I guess strike will in trouble because I shared my display. I just watch where FT did do and then move on to top step. Oh, let's go to this is the volume profile, so you can see where you're looking at the volume at 57 is volume high, active value and volume high. What you swing from yesterday, 56.70 is a place you want to be involved at, and 57.60 to 70 with short stops right below 83. So you can see where the volume there and where the volume node is. Oh, on Tesla side, banked a bit from the portfolio. You can see where we entered, we got filled again yesterday. Why not? Go to 5-minute chart. Right, so you can see we got filled again on the 15th. Okay then. So we bought, got out a couple, got in a couple, got out a couple. Have no fear in trading. Don't want to trade with fear at all. KTV TP2s just got filled. They show on a 15-minute chart. I guess extend the line. Maybe let's see that. So we know what we targets are, what we're looking at. So because the amount we have loaded now, we took TP1s and TP2s off from yesterday lunchtime. So this was lean more or less on the gap fill to have the secondary entry. Volume was pretty good, so boom 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 boom. Dun, 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 dun.
Gold is off $8, trading at $14.85, and the notes are trading down 20 big ticks. In the futures, crude is leading the pack, still trading around the composite point of control in crude, which is at 57.11. Crude's currently at 57.40. If it does not, based on what I saw, if it does not challenge the high put in yesterday at 57.85, we may see it turn down to 55. But there's talk of Saudi Arabia pressuring OPEC members to approve a rate cut. Now, it's convenient that they're asking for that because of this Aramco IPO. Higher oil prices will fetch a better IPO for Aramco. The leader in the indices is the Russell. The Russell is up 12.6 points, trading at 1605 or 0.8%. The DAX follows up 103 points. So that's where we stand. Really, the market is popping higher pretty strong. Overall, the theme here behind this push is that China's MOFCOM, whatever that is, I guess it's a ministry of some kind, says agreement has been reached with the U.S. to lift tariffs in phases as deal progresses. That's the big deal. And it's really pushed the markets higher overnight. That news came out quite early, quite a bit earlier, and at about the cash open for Europe. Actually, it's came out during the Treasury Open in Europe about 2 a.m. Eastern, 1 Central. And that caused the S&Ps to rip from about 30.75 to about 30.92. So this is on news. So the theme today is that risk appetite finds some legs after China noted for a reciprocal phased rollback of tariffs if a trade deal's reached. Also, German industrial production data misses expectations, dims some recent optimism, stabilization of data in the region. German manufacturers appeared mired in a recession. So that's what we're looking at. And a half hour ago, we got initial jobless claims in the U.S., which came in a little bit better, 211,000 versus 215,000. Continuing claims came in a little bit worse at 1.69 million versus 1.68. So that's where we are. Not much more to say there. Looking ahead at what's on deck for today, we did get also the rate decision out of the Bank of England. And what's remaining ahead of us is Fed's Kaplan speech at 1:05, consumer credit at 3. These are not expected to move us. 7:10 p.m. Fed's Bostic, and then the monetary policy statement out of the Australian Reserve Bank at 6:30 Central, 7:30 Eastern, and then the big numbers from China this evening. This evening, balance of trade, exports, and imports all come out at 10 p.m., expecting a market wiggle when those show up. Okay? So let's look at the review segment. The primary scenario yesterday is an open auction. We were opening in range, in value, on balance. So open auction is the expectation. I was looking for the key trade was 30.77, 30.78. If you recall, was looking for the low to be taken out as outlined here. $78 and the low of approximately 30.65. Now, how does the market accomplish this? Right? So the way this was accomplished, the plan was on point. The way the market accomplished this is here we are. We have what looked like an open drive down on the open, tests the low first thing. That was not expected. We expected more the market to open right here. So the stuff that happened to the left was not the expectation. Expected an open auction like this, a push to 30.77, 78. Beautiful, except that it was impossible to catch this trade because it occurred on news. And then we take out the low. There's the prior low, the green line. Take out the low, take it all the way down to 65 right here, and then expected a bounce and then a return to somewhere in the middle. That was scenario one as drawn here. Okay, that's scenario one. Well, it was done on news, tagged 30.77. Within an instant, it was down at 30.64. The opportunity that showed itself that was tradable, in my opinion, is the pullback to the 30.70, 172 area, which was the prior close VWAP on an impulse down. So this is a bona fide impulse down and looking for a continuation and a break of 65, and that ended up working out. We went to 63, then we pulled back to the low, to the prior low, and then we had a corrective what's called an ABC kind of correction back up. We ended up with a neutral day, right? Took out the IB low, IB high, IB low again, took out the IB high, closed near highs. The S&P really finished with a clear intent that it wanted to continue higher, but it ran out of time. So expected it to kind of continue stepping higher. This is not, of course, a trend close or anything like that, but we did shift the point of control higher, and we ended up closing near highs. So that's the recap of yesterday. Again, that it's pretty much exactly what was expected, and that's where we ended up. Now, on the overnight, pretty quiet. We end up popping immediately to 30.78, push back down, and then we get the news. Pretty good rotation there. Pretty good delta. Pretty good volume, and we're flagging now. And so we end up with this very emaciated looking profile down below. Double distribution. So what this, and it's hard to tell with this market. We're at all-time highs, so things don't function as we would normally expect. We've got to be careful here. The SOC, or the scene of the crime for this news, is really around 30.75.50. 30.75.50, and we're trading at 30.87 right now. And this looks like a standard or a traditional impulse flag. So we're looking for the continuation move, which hasn't happened. We have not taken out the high of the impulse up, expecting another push higher before it gets exhausted. If there is exhaustion, if the buyers have run out, we're new all-time high territory. We're near the century figure up here at 3,100. This could easily roll over and push down to 75 again to the SOC. I would not, look, I'm not going to sit here and impose on the market what I think it should do. Market doesn't give a hoot. I could use meaner words, but the market doesn't care what I think. It doesn't care what you think. It doesn't care what a bunch of us think. The market's going to follow the collective, the collective demand and supply of whatever commodity we're trading. It doesn't matter what it is, as long as it has liquidity, as long as it has volume. It's going to follow the standard auction process.
Stay tuned for the market forecast. Let's go. Good morning, friends and traders. Welcome to the market forecast. Thursday, November the 7th. I'm John Hoagland. As always, thanks for trusting me with your time. We've got some good things going for us today. 7:30 this morning, jobless claims already out. 9:30, the net gas number due out. We're going to take a look at these markets in context and see if we can't find some decent opportunities for us this morning. We are very sorry about the Coach's Playbook. We were unable to present it yesterday. We are planning on presenting it live on YouTube, Twitter, and Periscope at 12:15 today, approximately. We're going to do our best to get that to you. We are very much looking forward to resuming that Coach's Playbook. As far as news is concerned, yes, new signs of a truce in trade. China states that it is agreed to remove tariffs over time. Nothing signed yet here. We're going to have to wait until December until they find a place for them to meet. But it's good news. Trade-sensitive industries like Caterpillar and chip makers reignite the rally in equities. Even crude finds a bid, taking back pretty much all of yesterday's losses. And as far as earnings are concerned, just a couple of notables. Cardinal Health and Nikon already out this morning. Disney due out this afternoon, as well as Monster Beverage and Zillow. So we've got those to look forward to today. Make sure you like, share, comment, question, feedback, and heckling are always welcome. Good morning, Level 2. George Michael, Deg, Artemio, Jim, Andrew, Ezekiel, good morning, Rob, Gotland, and again, Level 2. Yes, I do see that. I was going to mention that Level 2. You've got that 3092 measured move, and we did fill the gap yesterday. So, we're going to see what we see here. Why don't we go ahead and look at the charts? Here's the daily in crude right here now. All right. So, hey, with good news, hey, we may need more. We may use more crude. Apparently, it's the third day, largely in balance here. Central location, weekly kickoff high to low, 57.30. Here we are, again, hanging around this nice little magnet we've created here at 57.30. Opening yesterday, the volume to the downside was pretty good. It was pretty substantial, but that's to be expected on an EIA day. Remember, what we had about almost 8 million barrels. Finally, the market did resolve to the downside. But here we've taken it all back today. So we're really kind of centrally located. I'm really going to be counting on short time frame levels as long as we stay in this balance for my opportunities. Taking a look at the 30-minute. Speaking of short time frame levels, settlement 56.35. Put it on your charts. May come into play for us today. We've got a lot of longs overnight after that news came out about tariffs, but we are trading basically at weekly at value area high. We've taken a look above, seemingly. Our longs from overnight are continuing to get paid, but as soon as they get the idea that, hey, we're not getting the buyers or the new business to the upside that we need to keep this thing going, they may take this market and bail, taking the market back to or near settlement at some point. Anything is, of course, possible. We didn't have a gap. We pretty much opened inside range and inside value, right again here at 57.30. When are we going to leave this area? When are we going to find some directional opportunity in multiple day time frame? It's going to be interesting to see if and when we can do that. But again, I'm going to be looking at short time frame levels with which to look for my opportunities today. Value high of the range yesterday. It looks like it's a weak high, but there's a little bit of sign of excess at the high here, just a little bit, not a lot. So this is going to be, a level that I will look at if we get to it. Again, value high, settlement value low. This looks like a relatively target-rich environment if we get the opportunity to see the market down here, because we've got our overnight low. It's kind of nesting right between settlement and the value area low. So opening inside range and value, it does tend to make me be a little bit more patient and look for better trade locations as the day goes on. Yes, maybe level 1, weekly kickoff high might come into play. If we can take out yesterday's high, that would be my next look. And the E-mini S&Ps. Okay, well, we have been noticing or surmising, because we have not been able to complete auctions on the downside for the last 3 sessions that this market was getting a little bit tired, maybe a little bit too long to the upside, maybe just looking for new information, and it perhaps got that new information last night. It certainly breathed new life into this move to the upside, taking us up to that 30.92 weekly kickoff, previous weekly kickoff level, just a measured move. I mean, that was a weekly kickoff from about a month ago. And here we are. Isn't that funny how that happens? So volume, open interest, kind of maintaining over the last few sessions here. We did add 6,500 in open interest on the preliminary bulletin this morning. So we still see money seemingly coming into this market instead of coming out of this market, which does lend itself better towards upside continuation. We want to see that volume and open interest increasing as prices go higher to tell us that this market that the auction is still healthy. Here's the 30-minute settlement way down here, 30.7550. Put it on your charts. We've got some longs. We've been holding longs. This is when that news came out here, 1 o'clock in the morning, approximately last night. I don't know. I was sleeping. I didn't see it and didn't hear it till I got up this morning. So the market takes us right to another important inflection level, the weekly kickoff from about a month ago. Again, just a measured move. We don't have anything to lean on up here. We've never been up here. These are all-time highs. There's no reference in the past as to what might have happened the last time we were here. So I just look towards those measured moves, and we can see how beneficial that may have been for traders that were looking at this last night. So we are opening with a gap to the upside. We did leave some excess, okay, some sign that the market did not accept down below here. So, while we still have a couple of, unfinished downside auctions here, it appears, at least for now, that we completed a downside auction, and now we have news to the upside. So what does it mean for us today? Well, we're going to be opening here in about 6 minutes. I'm going to be watching for gap rules. If we open up here and we leave the opening range at the low, I'll look for an opportunity to perhaps see what happens here up at 30.92. If we start to head towards the close of the gap, then I'm going to have to really try and stay a little bit more patient. Again, if the opening range remains the high, that might be a nice opportunity for us to come down to fill the gap or even test settlement before real activity may ensue. If we do pull back to settlement or yesterday's high, I'm going to kind of make an assumption that that's going to probably be shorter time frame overnight longs just kind of bailing out. So we do have gap rules. We can't close the gap. We trade in the direction of the gap, which would have us looking for longs. Again, we've got a little bit of possible resistance up here at our overnight high in this weekly kickoff level. Keeping that in mind moving forward. Here's the gold. Gold is the perceived strength in equities has price, returning to below weekly kickoff low. We're still largely in an area of balance that we've been in for a little bit over a month, it seems. The weekly kickoff high and low relatively close together because, we can kind of see just visually where our extremes are. We are at one of those extremes in this balance, and it's going to be interesting to see how this market responds. We added 4,000 in open interest to the upside yesterday. Volume, however, was pretty weak. So this market does give signs that there is a change possible coming, just we don't know what direction and we don't know when. Let's take a look at the 30-minute. All right, so here we are, 1488 even. Took that look below 1488 even, yes. So settlement way up here at 1493.10. Put that on your charts. We are piling into short in short time frame, piling onto the short side. Are we going to see longer, stronger money? keep us on the plus side if we are short. Not looking very good for us right now. Again, 1488 may be a decent resistance to sell a pullback. If we can't hold below that, then we may see our short time frame, short inventory move the market back up towards settlement. This is again an important level. As far as levels outside this weekly kickoff high and low, I'm really kind of focusing on our overnight low and settlement and our overnight high as for more important information. We did not necessarily open with a gap. We've attempted to take out the overnight low, which we were unable to do. Makes sense to me that this market seems to be turning around the other way as we have a whole bunch of short time frame, weaker money shorts in this market. And for the euro, volume falling off as price continues to move lower. We only added 700 in open interest yesterday. This may be indicating that this, at least the short time frame down auction, may be getting a little bit tired. I think it's looking for new business. I'm sensing change in this market, just not confident in direction or when. We're still pretty central between weekly kickoff high and low. All right, here's the 30-minute. There's a previous weekly kickoff level up here at 1125. We did not open outside of range or value. So again, it kind of keeps me looking on the patient side for better opportunities as the day goes on. This is another market that I'm looking again at overnight high and overnight low as possible interesting areas. Overnight low, of course, overnight high, relatively close to the high from yesterday. We're basically just kind of trading low of value from yesterday, but there's no real overnight inventory in this market. We looked lower, we looked higher, we went back to settlement just after the open. The market just seems to be seeking new information or new participation, and I think we're going to be able to recognize that new information, direction, or participation again at overnight high and overnight low. So try and stay patient in that market. Try to stay patient always in these markets. There's always opportunity. There's always another bus coming down the road. So you miss something, don't worry about it. Don't get mad about it. Don't fall into fear of missing out. Wait and look for your next opportunity. So, all right, again, Coach's Playbook, 12:15. Market recap, 2 o'clock. I'm going to take my deep breath and get into this. Stay humble, grateful, and creative today. Looking forward to seeing everybody at the Coach's Playbook. Again, we're very excited to start to present that again, and we'll be looking forward to seeing you there. Until then, and again, until the market recap at 2, get out there and profit.
Responsive somewhat. Now, the bid or offer at 30.95. This was here yesterday, and we expect a relatively firm offer at 30.90, which is slightly forming now. But overall, the market is, started right here.
Yeah, guys. So that's market is about to open. Let's see what we got. Make sure that my little box is open. Make sure that streaming is on. Right, open this box. If anybody wants to chat or any stuff, right, so then. Alright, so where we sitting at, what we doing. Alright, we already in this one contract. This was a long term trade we had sitting here right at 92. We got out that one. Looking to reload on the open. Now this is a risky play, trying to read what your plan says. We have that equal measured move. We expected liquidity there, preliminary liquidity right there. So we're looking for a 6 point and 12 point today, and we're looking to buy some 78s. We don't have it showing here because I don't want to confuse this. If you want to take a single offer that and just scalp out 5 to 6 points, no issues. We have a particular guy doing that. We reviewed oil already this morning. We saw the gap fill. I almost out of a lot on my Tesla. Well, I have like 4 because I added back yesterday. Go to Tesla. I added some contracts. Well, share buys. Market went our way, so we were lucky. I think I was mentioning it yesterday, just didn't show it. It's something that I choose, so we were getting 15s, got some more, just closed off. She take profits, still holding a couple. It's a really nice gap up, filled to the tick entry. We got in quite here in the market, placed the dip, got in, got out, and we have some more holding after our shares, which is a good long-term trade for we own, building a position into it. My average entry is quite low in Tesla at the moment for actual owned shares. It is in the 20, as of now, 2040 area for actual owned shares. I mean 240 area in 2040. Got some good RR on this trade from yesterday. Clean trade, nothing to worry about. Took the trade exactly on the gap fill on the ES. So that's how we participated on the ES on the buy side really. Now oil, yeah, good call here. Now this is where what we looking at in oil. Yeah, back here again. This level doesn't really thing. I'm looking to buy up some at 56.95. Looking to buy some 56.95 for a bullish move today because we got the gap fill. Whoopie day, another gap fill. Wonder why the market does that yesterday. We got beautiful sell on the market after getting crushed early in the morning. So looking for this level here. So we have a buy sitting here with 40 points. We have a 40 point stop loss today. If you want to go tight, you need to be behind the 67 minimum. You know where the breaker is here is at 65. So you don't want to be buying 95 when your breaker is 65 and you get flushed. Nope, not a good idea at all. We look at trading position, trading this, we trade the market what we see. So we set up on this is more the same setup here. And we give ourselves some room. And to make sure we have at least a 1-to-1 RR. So 95 and 40 is 35, which is a max number. Like the only spy we have set up right now, that 58.10 to 58.14 is a targeted area for us on the long side. Zaira Reno is very hot these days. I wouldn't be aggressive in this area. So you can see why my stops down here. I want to make sure this particular move is secured. Don't want to get flashed through. We want to see if we can get a test at 92. More than likely looking at a 10 AM entry for that. You can see the exact sell point this morning. Equal measure move that we had for a good week and a half, 2 weeks. You can see clearly here what you were looking at for equal measured move. Always have the big picture in mind. So kicked off from the lows from October, so we expected if the move continued to the upside, we are looking for the major pullback, crash, and then we were looking for the gap fill here at 61. You can get blown out this trade because these factors, because we traded against all-time highs. Always be careful on what you're trading. More die crude oil. We have our sell sitting right here at 58 cents. Right at 50 point stop loss, looking for 50 point TP. Use 45 as a TP. Looking for 50 to 60 points on this. Make sure you get your test back. This node 1 to 1 is optional out. Clear with the double. Using 1 to 1 and 2 to 1 RR. Using that. Good queen, Tesla, good queen. See, we test it right off the open. Now we have to see the reaction. Now first, the high probability trade here is looking for the 92s or at the 97 average entry. So it is not always at 92, it is the stops are, because based on what our stops are is at the round number. So if you do get bullish, we can manage it. Look for 6 points on the first TP and 12. 12 points on your 10 to 12 points on your secondary. Now I'm looking for some collisions. If I don't see collisions by 10 AM, no week again strong. So we have a backup trade right here. So down here, that is our actual 2 contract trade sitting right here. It gives us a lot more security. So if you have lag in it, be very careful how you enter in this trade here. You don't want to risk too much early this morning, and the oil is the play for if the breakout comes, then fade. If you get a dip buy that. So more or less proxying the market. And that's why I'll be going 1-to-1, 2-to-1. And on the support side also. Always manage your trades. Be patient on the trade. Make sure looking for a high probability trade to get in at 10 a.m. This is a high probability trade here. We have this trade on top there, which is the more high probability trade, is the target in that area. Oopsie. We're waiting for that 10 a.m. to trigger in your trade. Anyway, within 96 to 98 is the obvious trigger. We will be leaning into it a bit. Yeah, we didn't have summers. We have from yesterday's trade and some long-term bias trade on it. So this is more or less your trade to get in with skin in the game. This is your high prob trade. We're more or less position trading this for a fade. So 96 to 98 is where you're looking at for that entry at 10 a.m. You can see my time does not take into account daylight saving time because we don't live like that in the Caribbean. Our sunrise and sunset maximum deviation is an hour, so it's like 6:30 a.m. Well, actually it's 6:10 a.m. to 5:50 or 5:45 for sunset, and it's raining. It was hot just a second ago. Doom 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 doom. Let's make sure my volume on. Alright. So how to manage a trade? Always manage a trade based on your risk analysis. What Dan was talking about. If you're doing the quotas play of today, might ask a couple questions. Oh my shit, this stuff. Not gas. The hell is not gas anymore. Run, Tesla, run. Let's buy and hold that shit. Just make sure you know when to get in and get out of the market. Just gonna get some coffee. So I just talked to the boys there. Make sure they're managing and out of that trade. Both trades. Trying to manage in and out of the trades. So we check the risk. From our active, we have a single running there now. Looking for a 1-to-1 with 8 points. So how we active in the market here is one single at the moment, 8 points. 1-to-1 trade. Then lean on the market. We're looking at the heat map and what we see and orders in the market. Seeing a lot more orders up to the top here. So we have our secondary, we had 2 contracts running. After our contracts, we got break even on, out on break even on the primary. Just don't want to have too much risk this early in the game. With our sell off, all well and good, we still have profit to have. Oh, I'm drinking coffee, sorry if you're hearing noise in the background. So, this is our 2 working order based on the same TP levels. So we just have a single 1-to-1, 8 points. 3 downside. and always being able to manage using and seeing volume as as part of your trading is always a good idea. Um, Bookmap just costs a little bit of money. What is an important tool in our opinion? Is allow us to see a little the depth of the market really. Hence the name level 2. If you don't know what level 2 is, search level 2 in trading, quote unquote. Because what we're doing there is more or less range finding, looking for opportunities in the market, looking to execute at or about um, around levels that you're looking at in the market. We use booking orders, live entries, sometimes, especially on oil. We just tend to take live entries because the oil guy, he likes adding. So yeah, like what we would have a single here, we would have a base entry position. Just the cost of trading oil is damn expensive. Pray to God that we could get some micros in oil at some point in the near future, not in the far future. So I give them instruction if they see the fade, how to manage and how to initiate and be in and out of contracts. They pretty good guys, both of them. Have next two of them. May actually just do it through the internet with them, have them boys sitting and watching back you starting to view a couple of the videos already. A couple younger fellas. Dum 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 dum. It's quiet. We don't have this inside. I don't need to confuse anybody. On the averaging at 97. It will give us. So nobody does secondary working or I are here. With the full body. 2003. If we do get filled. With the fade market. Actually, if we 85 should be 12.5. No, did I type there? No. Is it magic that you need to see? I want to take profits here, right? not magic. Dun, dun, dun. Dun, 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 dun. Everybody's having a relaxing morning so far. Go, just keep going, just keep going up, just keep going up. Go, Obi, let's go. Go. Bye bye. I have no issues with Tesla going up. Snipping some money. Yeah, I was talking to those guys across the next room there. Singler 92s, sell is active. See we have some movement on the oil. Also says normal time see 10 o'clock execution. Function of the market for always a function of the market. And my next buy point for Tesla is at 22.50 or 23. I think it was 23 I had set up. So make sure on what your leans and how you're leaning in and out of the market. Collisions really weak here. So I don't think I have a 50 a bit here. What the YouTubes have.
Progress, new life to the upside in equities, and we still have a lot of earnings coming out. Stay tuned for the market forecast. Let's go. Good morning, friends and traders. Welcome to the market forecast. Thursday, November the 7th. I'm John Hoagland. As always, thanks for trusting me with your time. We've got some good things going for us today. 7:30 this morning, jobless claims already out. 9:30, the net gas number due out. We're going to take a look at these markets in context and see if we can't find some decent opportunities for us this morning. We are very sorry about the coach's playbook. We were unable to present it yesterday. We are planning on presenting it live on YouTube, Twitter, and Periscope at 12:15 today, approximately. We're going to do our best to get that to you. We are very much looking forward to resuming that coach's playbook. As far as news is concerned, yes, new signs of a truce in trade. China states that it is agreed to remove tariffs over time. Nothing signed yet here. We're going to have to wait until December until they find a place for them to meet. But it's good news. Trade-sensitive industries like Caterpillar and chip makers reignite the rally in equities. Even crude finds a bid, taking back pretty much all of yesterday's losses. And as far as earnings are concerned, just a couple of notables. Cardinal Health and Nikon already out this morning. Disney due out this afternoon, as well as Monster Beverage and Zillow. So we've got those to look forward to today. Make sure you like, share, comment.
Cool dude, you're naked. Nice scout there. Funny guy, Trevor. Want to see the price action right around here. The base set up here. Right, yeah. So you know you want to have your stuff beyond that. You want to have your active. In case you get follow through and show through, you have a single on the booking order side and a live entry in the range side here to back up your trade. And it's hot again. Rainfall, getting hot. So, sorry. Hope nobody can hear that. See this entry here at 67 would be when we loaded. So we are 1 on 95, 2 at 670s. This node is we're using for protection and entry. We want to make sure we have enough backup. I think not gas news, so that might be pushing it. So just pre not gas. So we set up is the 2 contracts 5670. Now you want to make sure that just stop loss bit tighter when you're trading off at that level. So we're using 20 points, so you could be using 2 contracts on that. You could always get knocked off, but that's how we look to trade in a position like this. 25 points. I put us to 45 because we don't want to get the wrong number. Let's play at 25 points on your TP1, which is the inflection point of 56.95. Started in London, close to get at entry. Just want to see the order flow, how the order flow looks. Being patient on this side. Let's see where the TP1 set up. Alright, yeah, we get big dip. AC makes a lot of noise, as I try to keep it off in this room especially. So you can see pivot 1, pivot 2, bandwidth entry, and that being flat is a position in a market. So cash is a position. I wonder how and why. You can see the break is not clean. That's a big fear right now. So I get lag entry this done. Now we actually have this setup. One at 96, one at 98, averaging at 3097. If you do get looking for fills on that way up. So we just outside Manta UIL should get a notification from chatting or those guys. Cross room. Oh, I need to play video games. So now it's like what, 10:15. We have active positions. I might, well, those guys doing their stuff at 12:50, which is, don't know if it's central time. Or, you know, I should get a notification. Need to go and check those guys, see what we're doing. Sit and have a chat with them. That's all we do all day. Sometimes we gonna play video game. Not today. We're gonna play a lot of video games today. Today is a more business-minded section on what we actually looking to do and trading, because we seeing some potential to be on the downside of the market today, meaning that we have our entries are a lot more risky, quote unquote, than normal. So that is why we looking to actually see and look at the market and trade and sit down and watch charts today and have a chat while we watching charts. So sorry you guys can't share that because we have some proprietary quote unquote proprietary stuff. If questions and answers do come up in top set, because I have a particular question, because I need to find out if I could get my S3 license, which is my futures license. You probably see if you were watching, I was searching for it this morning. I have a couple of questions if someone like me could actually get that and with the ramifications of that, because what we're trying to create here is more or less a pool, a trading pool. So that's what we sit around talking about also today if the market doesn't be moving at all. So hope you guys trade small, trade smart. Make sure you have limited risk on, manage your trades, use your brain to take profits and stop and look for the manage your stops as close as possible. We start with wide stops and then manage through acceptable risk and what is acceptable risk on each level. And how we just start our trades, meaning how strong we feel about that position, both technically and fundamentally. Because yesterday was more or less, because we saw the build was 8 million rather than a build of 1.5 million. That's why the lean came on at that 56.80 position and took a lot of advantage of it. So trade small, trade smart, guys. See you guys probably this evening in top stuff or in the coaches forum. Okay guys, bye.